Happy Tuesday, everyone. My name is Luke, and I'm a new business advisor here with Collective. And if you're here today, then hopefully you want to learn a little bit about taxes, a little bit about business financial optimization. What are the best ways to run my business as a small business owner? How do I optimize my taxes, save money, all of that? Uh, and if that's what you're looking for, you're in the right place because I work for Collective. And Collective is an all in one financial solution for small business owners. We will set up your business, we'll form an LLC, make an S Corp election on it, we'll handle your payroll on an ongoing basis, your bookkeeping on an ongoing basis, provide personalized support throughout the year. And then at the end of the year, we will take care of your business tax filings. So when it comes to business finances, we pretty much do the whole shebang. But today, we are running a session we like to call Tax Tuesday. And it's an AMA session. It's an Ask Me Anything surrounding taxes, surrounding business finances, and just other topics like that. So please ask me anything you'd like. But it's important to keep in mind, though, that this information is just that, information. Don't consider it, legal advice. Don't consider it tax advice. The tax code is very complicated. Some of the stuff that I'm saying could be incorrect. I think I'm right most of the time, but sometimes I'm not. And it's just important to speak to a CPA or some sort of tax professional before you do anything, before you act on any of this information for your business. But now that we've got that out of the way, let's go ahead and answer some questions. You said Collective will make an S Corp election. What does that mean for my business? Well, when I say S Corp election, I mean S Corp. I mean going S Corp. I mean converting your business into an S Corp. And essentially, the reason that you might want to do that is to save on taxes. It might save you on the self-employment tax. And what happens before you're an S Corp? Let's say that you're just, like a sole proprietorship or an LLC, something like that. You pay a lot in the self-employment tax. You typically pay the maximum amount that you can in a self-employment tax if you're just a sole proprietorship or an LLC. The self-employment tax, it's a flat tax rate of 15.3%, first off. And before you become an S Corp, typically all your money is subject to it. So if you're a business owner making, $100,000 a year and you're a sole proprietorship, then how you calculate your self-employment tax is you take 100 grand and you'd multiply it by 15.3%. That's pretty much how it works. With an S Corp election, though, it's a little bit different. To even make an S Corp election, you've got to have some sort of business entity in place first. So something like an LLC, for example, that's got to be formed first. So once you form your LLC, you'll file paperwork with the IRS. You'll file paperwork with the feds. S Corp paperwork that will have your LLC taxed under the S Corp tax rules. That's how you become an S Corp. But now that you've done that, you are now an employee of your own company. That's what filing that paperwork does, is it establishes kind of like an employer-employee relationship between you and your own LLC. Now, you're still the owner, of course, it's still your business. But for tax purposes, you literally become employed by it as well. And since you're employed by it, your business will pay you a salary. It'll pay you a wage, just like you'd make, if you worked for someone else as a W-2 employee. But the advantageous thing about S Corps is that the only chunk of your money that's subject to the self-employment tax is your salary amount. So let's say that you make $100,000, using my earlier example. But let's say with an S Corp, let's say that you've determined that a $40,000 salary is reasonable to pay yourself, in an S Corp. That first $40,000 is still subject to the self-employment tax. You still pay it. The other $60,000 or like just the rest of your money, outside of your salary, that chunk of money is no longer subject to the tax at all. So in this situation, how someone would come up with their tax savings is they take 60,000 and they multiply it by 15.3%. That's how much they're no longer paying in the self-employment tax by becoming an S corp. So I believe that's around $10,000 in tax savings, in self-employment tax savings. So once a small business owner reaches a certain level of income, then it might be worth looking into whether or not an S corp could save you some money. Oh, here's a great question. If you pay out, like if you make payments to a business and not a single individual, do we need to produce a 1099? Yes, oftentimes you do. Oftentimes you'll need to produce a 1099 for that person's LLC. So like, let's say that you're doing business with somebody and they have a business structure like an LLC, or let's say they have a business structure like a partnership, which is, multiple people on an LLC. You would want to 1099 that LLC, not the person individually, that LLC, because you're getting paid by the LLC, not the individual person. Now, if you're dealing with an individual person without a business entity, then you will need to list them on the 1099 and use their social security number or whatnot. But they also might have an EIN number they've created for themselves as a sole proprietorship. You'd use the EIN number instead. So yeah, that's how it works with 1099 reporting. What if I don't receive 1099s? Do I have to report that income on my tax return? Yes. You need to report all the money that you make. Usually, you need to report to the federal government. It's really important because let's say that you were to get audited or whatnot. Doesn't matter if you have a 1099 or not. If the government can see that you've made income, which they can because you're going to be deposited into your bank accounts, the government can figure out when you're making money. Just because you don't have a 1099 filed against you does not mean you don't need to include it on your personal return. You still do. You still need to report all your income. How does an S corp differ from an LLC in terms of taxes? Well, mostly it's what we discussed a little bit earlier in just being able to reduce the self-employment tax via paying yourself a W-2 salary, via becoming a W-2 employee by your own business. It reduces the amount of self-employment tax that you pay, usually when you're comparing it to simply an LLC. Oh, and also, it differs in how you file taxes too, which I think is probably, the point of that question. It was a really good one. Is how does an S corp differ from an LLC in terms of taxes? But that could also mean that they file literally different types of tax returns. So when you're an S corp, a business return has now come into existence for you. Like you need to file an S corp tax return now. It's called an 1120S. So now essentially the difference is when you make an S corp election, you have an extra tax return along with your personal return. What are the requirements for a business to qualify as an S corp? Well, the only entities that can make an S corp election are for-profit business entities. So things like LLCs, corporations, PLLCs, professional corporations, things like that, partnerships, multi-member LLCs. Those business structures can make S corp elections. So that's one requirement, is you have to have a business structure in place. Another requirement is that all shareholders of an S corp have to be permanent residences of the U.S. It's not, the S corp election is not for foreign people foreign to the United States. It's for people that are permanent residents to the United States for the S corp. Now, another one is you can only have up to 100 shareholders in the business. You can only have up to 100 owners. If you have more than 100 owners, then you have to go to another type of structure, like a C corp structure or something else. Um, so those are the main requirements, right there. What types of businesses should not elect S corp status? Well, one is if you currently have a lot of business debt, then you might want to speak to a CPA or speak to a qualified financial professional to determine whether or not you should become an S corp. Because sometimes when you have business debt and you make that S corp election, it can be really harmful for you tax wise. So it's just not a good idea without getting some guidance from somebody. Another sort of type of businesses that don't need an S corp election are businesses that are involved in passive income, because the S corp election reduces the self-employment tax, and the self-employment tax is only charged on active income over things that you have to actively work to reduce your income. Passive income are things like rental properties or investments, like financial investments, things like that. How can I go about leaving a business if I'm a 50-50 partner? Well, there's a few ways to do it. Probably what you'd want to do is file paperwork with the state. You'd probably want to amend your articles of organization for the LLC to remove you as a partner, just to remove you as a member. And usually, something like that, this is kind of done like with the partnerships together. Usually there's like a partner meeting that you adopt. You write down what you all agree to, you sign it, and then a registered agent or someone goes and files the paperwork with the state. So that's usually how you do it, is you just file paperwork with the state to remove you from the partnership. How do S corps help business owners save on self-employment taxes? By paying yourself a salary. Since that you're an employee, since that you can pay yourself a salary, it reduces the amount that you pay on the self-employment tax because it's now only subject to the salary. The rest of your money are called distributions or business profit. That's what a lot of people call it, is business profit. And the leftover business profit is no longer subject to the self-employment tax like it was previously, like it was before you went the S corp route. So that's how it helps you save in taxes. Is it reducing it? It reduces the self-employment tax by allowing you to pay yourself a salary. What is reasonable compensation, and how do I determine the right salary for myself as an S corp owner? Well, the thing about reasonable compensation is that there's not a set standard for it. The IRS doesn't provide some sort of objective way to come up with a reasonable salary. So that can be challenging, to be honest with you. So there's a lot of things that you need to take into consideration when you're thinking about paying yourself a reasonable compensation. One is think about, what are other professionals in my field, with my similar levels of experience that I have and whatnot, what are they making at their jobs? What are they making in their W-2 positions? So that's one way to think of it when you're thinking about a reasonable salary, but that's not the complete way, because an argument could be made to where if you have an S corp, then it might be advantageous, or it might be reasonable to pay yourself a little bit below the average of the person that has years of experience in your business, because part of your value is not necessarily coming from your direct experience or direct work like it is for the W-2 employee. It might just be because you started a business and you get referrals to you, which helps you make more money. You have other efficiencies in the business that's producing the value, as opposed to your active participant W-2 work. So anyway, what I'm trying to say is, when you're coming up with a reasonable salary amount, it just needs to be a reasonable method. Where do I live in the country? What do other people, what do they make in their industries? How many years of experience do I have? How many hours a week do I work? There's just several ways that you can use to justify a salary amount. What happens if I pay myself too little or too much in salary? Well, if you pay yourself too little, then you could get audited, because that's the thing about the reasonable salary and why the IRS even uses that terminology. Why they even call it a reasonable salary. And if it's too small, then they could audit you, and they could say, no, that salary is not high enough. It's unreasonable. With your level of experience, with how much money you've made, you need to pay yourself a higher salary. And when they were to do that, they might say, okay, no, your salary should be this amount instead. And then they're going to hold their hand out and say, you now owe us self-employment taxes that you didn't pay. You now owe us penalties and interest. You owe us all this kind of stuff. So it's not a good idea to pay yourself a super low salary. Pay yourself a reasonable salary. So if the IRS ever had a question, you would have some justification. All right. What happens if I paid myself too much in salary? Well, that is the safer side, in the sense of avoiding an IRS audit. Probably is if you pay yourself a too much in salary or a really high salary, the IRS would theoretically probably just be less likely to audit you in the first place, because you're paying yourself, statistically speaking, a high salary, more than everybody else. But what happens if you pay yourself to a high salary is you pay too much in the self-employment tax. That's the drawback, is you pay more in the self-employment tax than you'd otherwise have to. So keep that in mind. What are the pros and cons of freelancing? Ooh, that's a really good question. Pros, I think, of freelancing. One is that it's useful against burnout. I think a lot of people move to freelancing when they experience burnout at a corporate job, because in freelancing projects, there's typically more variety in your projects. You're working with different people, you're doing different stuff, different types of projects. So like people that kind of like variety and change, I think enjoy the freelancing industry. Now, part of it, that's a pro. A con might be, though, is that it's a little riskier. Like when you're freelancing, it's entirely up to you to make your income. If you eat or not that week, it's up to you. And don't get me wrong, that can be unbelievably exciting and riveting, but it can also be scary. So it's just something that you want to ask yourself before you become a freelancer. How can I find more clients in my industry if I start to freelance? Well, one thing I would say is utilize the freelance websites, of course, like Upwork, places like that. Another way is social media is really useful. As much as I hate to say it, but it is. Places like LinkedIn, things like that. If you can become, somewhat of a thought leader, then people will start following you and listening to you. And if they need your services, they'll reach out to you. When I get these clients for my freelancing operation, how would my taxes work? Well, it depends on how you do your taxes. If you're just a sole proprietorship or an LLC, if you haven't gone the S corp route, then likely what'll happen is You will freelance throughout the year. You'll work for clients. You'll either work, on a Upwork side, or you'll work for clients directly. And either sites like Upwork or the clients will send you a 1099 for that year that you did work. And that 1099 should show how much they've paid you in total for services you performed them or products you've sold them. Or it's typically services that are provided. But you can expect to get a 1099. And then you take that 1099 and you just be sure to report all of your income that's on that 1099 on your tax return. And in this case, if you haven't become an S Corp, you'll file it or you'll report it on your Schedule C of your personal tax return. If you go the S Corp route, you will report all of your income on your S Corp tax return. That's a corporate return, and it's completely separate. So that's the differences between LLC and an S Corp. All right. How should I balance salary and distributions to maximize tax benefits? Well, I mean, really, the main question here is to ask yourself, am I paying myself a reasonable salary? That's the main thing to ask yourself. To ask yourself, if the IRS were to examine my salary amount, would they find it reasonable? So that's the first thing to ask yourself. The second thing to ask yourself is this as low as I can get it while it's still being reasonable? Is this, because here's the thing. If it's a balance between risk and saving in taxes. The lower you pay yourself, the more you save in the self-employment tax. But the higher risk that the IRS might deem that unreasonable. So at the end of the day, the salary is up to you. Ooh, how does bookkeeping for an S Corp differ from a sole proprietorship or an LLC? One of the big things that differ is with an S Corp, you have to track a balance sheet. A balance sheet is essentially it's a document that kind of gives you a snapshot of all of your assets in a company, of your liabilities and your equity in that company. And equity and all of that is an important concept when it comes to S Corps. And that is actually not required for just single member LLCs or anything like that. But the reporting, it is, a balance sheet is required for an S Corp. So that's one of the ways that bookkeeping differs, is you have to start tracking a balance sheet now that you're an S Corp. Jacob has a really good question. If I'm currently a freelancer making roughly 80K, is it worth doing an LLC as an S Corp? It very well might be, Jacob. And what I would recommend is reach out to us. Send us a message here on Instagram, go to our website and schedule a call with a new business advisor. And we'll walk through if it might be in your best interest. And if it might be, then we could talk about a collective membership. What's the number that you recommend to go S Corp? Is there a limit or a ceiling when it comes to an income number? What we recommend here at Collective is to have a general net income of around $60,000 a year before you join Collective and become an S Corp. And when I say net income, I mean after expenses. So after you've paid off business expenses. So your gross income is your total dollars in total, your total gross income in total. So, it might be $100,000 that you've made the entire year. And let's assume that you have like $20,000 in business expenses that you can write off from that money. Your net income is now $80,000. And that's what you're taxed on. That's what matters, the net income. So for an S Corp, we say a net income of $60,000 before you go that route. I day trade stocks and have an LLC doing it. I make about 100,000. Is it worthwhile to become an S corp in that? Is it worthwhile? I'm sorry, to become an S corp in that industry? It very well could be. Sure. And usually, let me back up a little bit because I know I said previously owning passive financial assets might not be the best option to make an S corp election on. But if you're day trading stocks, that usually implies that you're actively trading stocks day to day, which is active work. That's not passive investing, that's active investing. So the IRS would probably want you to be charged self-employment tax on your day trading profits because that's active business. So yes, an S corp might be in your best interest in a situation like that. Sure. Is the business structure for collective an S corp? um, I doubt it. I doubt it. I doubt that's the case. Collective is probably a C corporation, if I had to guess, because we're investor backed. We're venture capital backed, and I believe that having ownership in your business, usually the S corp, like with multiple people that own things in your business, sometimes an S corp election isn't what you want to do. Um, that's a really good question. Okay, I think I have time for a couple more questions here. Can you start off as an investor backed business and eventually become an S corp? Yes, like there's ways to convert business structures to other things. Sure, like you can convert to a corp. You can convert to all kind of stuff. So I don't. There's not anything that I can think of that would prevent you from becoming an S corp if you're investor backed. But again, in situations like this, it's very important to speak to a tax attorney. Um, and just someone a little bit more, I guess, more has a little bit more acumen in these sort of complex business structures. Can a trust be an S corp? No, a trust would probably not would not need to be an S corp. An S corp is typically for for-profit entities, and trusts usually not. Trusts are usually just ways to preserve certain assets. They don't typically don't have a profit motive. All right. Well, it looks like that's all the time that I have here today. I actually have to go and have a conversation with a prospective collective owner. But like I mentioned a little earlier, if you think that an S corp might be beneficial for you, if you think that collective services might be a good fit for your business, schedule a call with us. Go to collective.com, set up a meeting with a new business advisor, and we'd like to discuss next steps for your business.